Yeah, so the question came up, when to flip on a position. It's a great, great question. And again, I'm by no means the greatest flipper in the world. I think that's the name of the dolphin. But one of the goals of when to flip is when you are immediately wrong. You are never correct on the trade. That is one of the number one reasons to start flipping, is you get into a position and it just doesn't start working pretty much immediately. Number two is if it gets back below the main moving averages, if you're playing a trend trade. We'll talk about that in just a second. And number three really is the big one, is if the flipping direction goes with the primary trend, then it's a little bit easier to flip, right? So those are the kind of like the three things. You're never correct, it gets back below the main moving averages, and it's going with the primary trend. So let's, for example, go to Beyond Meat on the daily chart, and let's just look at what's the primary trend on Beyond Meat. Primary trend is, what do you guys think? Bullish or bearish? What do you got for me? Yep, primary trend's bearish. Okay, cool. So we got the primary trend. Now, that doesn't mean that a day trade or a swing trade can't go bullish just because something is negative, right? That obviously doesn't make any sense. You can make quick short-term moves intraday, one direction or another, no big deal. Now, if we go back into a 5-minute chart. So the very first candle was a really, really nice hammer. Beautiful hammer, upper shadow, right? The next candle, I mean, these highs are almost the exact same. Almost the exact same. So you're talking about like a beautiful, beautiful potential breakout, right? Next candle comes in, another nice hammer, another good buying candle, thinking to yourself, okay, this is wonderful, I love it. And then another really, really good retest of that resistance. So most people are gonna think, yeah, it makes sense to go bullish right there. So if you set up an entry to go bullish here, right, with a break above those candles, are you immediately wrong, yes or no? Yeah, immediately. You're absolutely 100% incorrect. So you're like, okay, I got wicked into the trade. Obviously, I'm not winning on this position. You automatically have to start thinking worst case scenario, and then start to use one of these three approaches, right? You're never correct on the trade. Okay, so far we're not correct. And especially if let's say your stop loss on the trade is here. So if it gets back below the main moving averages and if flipping goes to the primary trend. So the flip would be bearish, we're automatically wicked out. So at this point, you're hoping for a bullish candle, the lower shadow, and some type of really, really nice long bull candle. Next candle, boom sauce. So not only are you wrong within 10 minutes, which is good, right? If you're gonna be wrong quick. So not only are you wrong very, very fast, but the second piece of that intel is you also closed below the hammer on the 5-minute chart. So all the longs are trapped, and you can see visually with your mind all the bulls who got bullish up there trying to buy the breakout, which again, it could have worked. It absolutely could have worked, it just didn't. All the bulls who tried that, they're also trapped. Now, huge bear volume. Beyond Meat went from 111 to 107 in 10 minutes, which is $4 to the short side. And what you'll notice is there's a little bit of a bearish retest gap in here. So if you get stopped out in this trade, and again, this is the hard part, this is the challenge, this is the part that is very scary, and yes, a lot of people want help with. I practice this as often as I can. When do I flip? So if I was once in bullish, I just got stopped out, which I didn't take this trade bullish, so we're clear on that. So my entry is a little bit different than it would have been. But since this is a bearish retest gap and you're getting tons and tons of bearish volume, and now you can see on the 5-minute chart, you're with the moving averages and shorting would be with the primary trend, where should you try to flip to get in short? And the answer would be, you're either gonna sell off of the low of this candle or you're gonna sell off the low of this candle, one of the two. Limit sell off of there and your stop either up here or somewhere over here, somewhere above this candle, somewhere above the moving averages. So again, I didn't take that exact trade. I didn't flip on this one, but let's say I would have shorted there with a stop above the moving averages. So limit sell 107.50, stop 109.50. $2 stop loss. I just lost $1 on the trade. I'm sad, I'm worried, I'm upset, but the trend is There it is. So I'm filled on the retest, right? So got in on the retest. If I didn't get in there, I definitely got in with that candle. And then there's your bear breakdown. Okay, some sideways action, another retest, and we're about to start dropping. So at this point, all the moving averages are in your favor, right? You got the close, you got the retest, and again, you just lost on a trade. So you don't want to get boned twice. You don't want to lose on the long and lose on the short. That always sucks. Now, I'm not saying it's impossible to happen, by the way. It happens for sure, but I don't want to lose a full R on the second trade. So I'd lower my stop and take my stop loss and lower it now that's above moving averages. Okay. Bear candle, another bear candle, another bear candle, another bear candle, and then bang. Bear volume, huge bear volume, and look how far we are lower. So what's ironic is if you shorted at 107 with a stop at 109, this has actually already dropped $2 and some change. So if you went short 107.50 and now it's at 105, is this more than a 1R loss? And the answer is yes, it is, right? That would be right about 1.3, give or take. So you shorted with a $2 stop loss, and now you are up more than $2 on the initial stop. You're up more than your R that you just lost on the previous trade, which means huge bear volume. It's making a lower low. You did the flip adequately. A lot of bear candles in a row. Take the money and run. Take your 0.3 Rs, 0.4 Rs, and be done. Just exit. Either market exit or limit exit your position down here, cover your trade, and you're out. You're out of the trade. And this is what happened a little bit later. So again, you're never going to get in the exact, you're not going to get out the exact low anyway, ever. I am still in this trade. So the way I played it is the way you can see on your screen where it says bearish entry and then hold stop. So I played it with like $2.50 risk. So pretty wide, honestly. And I should have shorted right there on the retest. But when I saw it once this retest already occurred. And I guess I was chicken. I wanted to close below that support. So when this candle came in and closed below, I did the limit sell. I should have had a lower stop. Anyway, long story short, I'm winning on the trade. I'm not going to lose on it. So what I'm going to do now is actually lower my stop loss. But that is, in essence, when to flip on a trade is if you can follow one of those, if you can follow all three of those rules in the exact same situation, it can help you. And that's why I would say number four is the profit is make back what you lost. Move on. That's it. This happens to me so many times, my dear friends. I mean, I'm literally talking a daily basis where I will lose, let's say, $1,300 on a trade. Okay, because my risk right now is $2,000. So if I lose $1,300 and then later in the day I take a trade, or later in the day I take the same stock and I make $1,680 or something, what do you guys think? Am I going to be done for the day? The answer is yes. I mean, realistically, that's still $380 pressing buttons. Don't overthink this. Don't overcomplicate it. It doesn't matter what your risk is. It took me a long time to get to the level that I'm at, but I have the ability now to look at a chart, very clearly see it, very clearly see the setup, get in, get out, make $4,000, $5,000, $6,000 and move on. It's not challenging for me right now at all. You can absolutely get there. I promise. You'll have that ability. You'll have that capability. It is just math. It is just basic numbers. Don't hold for too long. Take your winners. And once you have that type of profit, bank it and just be done. You go, okay, cool. I'll move on to the next. So that is my answer for when to flip.